Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for the second day of our Metals and Mining Conference. Our next live presentation is from Red Pine Exploration. Red Pine Exploration is a Canadian gold exploration company focused on the acquisition, exploration, and development of mining properties in Canada. Please note, you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book Meeting in the top toolbar. At this point, I'm very pleased to welcome Mike Michaud, President and Chief Executive Officer of Red Pine Exploration, which trades on the OTCQB venture market under the symbol RDEXF and on the TSXV under the symbol RPX. Welcome, Mike.
Good morning. Thank you very much. Welcome, everyone. Thanks for joining today. As Greg mentioned, I'm the CEO of Red Pine Exploration, and I joined Red Pine Exploration in July of the last year. I joined because I'm very excited with the opportunities this company has and their main project, the Wawa Gold Project in Ontario. And I'm very familiar with the project, having worked down the road for 8 years for Whetstone Gold Mines. Here's our forward-looking statements. For more information, please visit the company's website. So the Wawa Gold Project is 100% owned by Red Pine Exploration, and it's located in northwestern Ontario. You can see on this map in blue, that's Lake Superior, so the north shore of Lake Superior, a very beautiful area. And we're in the Mishpicot Greenstone Belt, which is host to a number of producing gold mines. And it's been an area that's really been underexplored over the years, and we've seen a lot of recent investments by companies in this region, including Alamos Gold, Whetstone, Barrick, and Newmont. So it's an area that's growing fast. The mines are increasing in size, and most of the other producers in the area have their own infrastructure and own mills. So Alamos, you can see they have their Island Gold and the Magino mine, which is just down the road with a large milling capacity. You have Whetstone further to the west. You have Barrick and Newmont. And the Alamos and Whetstone are both within 100 kilometers of site. You can see the red pine tree there in the middle. We're in the middle of all this, all the other mines in the area. We don't have a mill, but we have a deposit, and it's a deposit that could possibly be mined with open pit or underground. But having the infrastructure of existing mills in the area is really a big benefit for us. And in the future, it gives us an opportunity to possibly partner with somebody for custom milling, or there's always the option of building our own mill as well. So it just gives us more optionality, and I think that's going to allow us to advance this project at a faster rate than most of the projects. This is why I really like the property here. It's a very large property, has a large land position, over 7,000 hectares. You can see in the image, we're right beside the town of Wawa. It's a town that has a population of around 4,000 people. So there's a workforce that's there, but more importantly, there's an airport, there's the Trans-Canada Highways right there, there's power there. So starting this up, this project up, is going to be a lot easier than other projects, particularly in Northern Ontario. We have infrastructure nearby. And part of that infrastructure was built in the old days, particularly in the 1930s and the 1960s, when some of the historic or previous mining has been completed on this property. And that's what I really like about this. You can see in the map the number of X's. That marks the location of some of the old mines. And these old mines, they typically would go in, mine out the high grade, and because they didn't have drilling technology, they often weren't able to do a proper exploration around these mined areas. And then, they shut these mines down when gold price went $30 an ounce. So we've been able to consolidate the land package and then start putting together the big geologic picture and going in here and starting to drill in these areas and finding more gold mineralization that was really missed in the past because they didn't have this drilling technology. And it's a really good geology because it's hosted in a rock called diorite, which is an intrusive rock, and it's very hard. So when you have a shear zone or a big fault zone that comes through, it cracks this rock because it is so hard. And that's where it allows the fluids to move through and deposit the gold mineralization. And when I look at this, it's the similar style of mineralization that you might find at the Eagle River mine, which is just down the road that Wesdome has. And it was an area that there was a lot of old production that, the mining company went back in, they did some more additional work, they put together a better geologic model, did the drilling, which wasn't done in the past, and they found new zones. That was the same thing that Alamos did at their Island Gold Mine, which is just down the road. When you look at other areas, when I worked for Wesdome at the Kena mine, had a very similar look to this. It was a big property, a lot of old mining, but a poor geologic model because the properties were so fragmented in the past. And we found the Kena Deep, and now that mine is going again. And if you look at a Cisco and their Windfall project, they just sold 50% of that project for $2 billion to Goldfields. And that was, again, it was an old mine at surface that wasn't that good, and they went back in, new model, drilled those deep holes, and they found the best part of the deposit. So that's certainly our thesis here, and I certainly am looking at this project and exploring around the known mines and stepping out to find what could be a much larger deposit than we currently have. And this is what I mean by a lack of exploration. And what we can see here is the long section of each of the mines. And on the far left, you see Wesdome, that's Eagle River Mine. And in the middle is Alamos Gold with their Island Mine, and then Red Pine Exploration on the right side. And really it shows the surface and then the amount of exploration that's been done. And at the other two mines, they're already down to 1.5 kilometers. But Red Pine, the deposit's only been defined to a level of approximately 350 meters. It's just really because that exploration hasn't been done on this property. And that's what we're doing now, is starting to look outside of the existing resource to see if we can't expand this for a much larger underground operation and maybe closer to surface and open pit operation. So this is the focus of the work that we're currently doing, and this is why this exploration potential exists in this area. So after I joined in July, we updated the mineral resource estimate. There was 5 years of drilling, 65,000 meters of core that hadn't been used to update the mineral resource. And the last time it was done was in 2019. And they had a resource of approximately 700,000 ounces of gold. Now, when we incorporated the drilling over the last 5 years, we were able to update the resource estimate, and we increased the resource base by 150%. So we went from 700,000 ounces of gold to now 1.7 million ounces of gold. So we added 1 million ounces, which was very good. I thought we were very happy with that resource estimate. But probably more importantly is now it started to show that near surface, where a lot of this drilling was done, we've actually defined a lower grade style of mineralization around the existing high-grade mineralization zone that's there. And what it shows is that we could have an open pit followed by an underground operation. It just provides this optionality going forward. Obviously, we have some more work to do. To better define the resource here and to expand the resource. But this optionality, it says, oh, you could have a big pit followed by an underground, or maybe we have a starter pit and then we go underground, or maybe we just mine the whole thing with underground. And this is the optionality. This is what's going to drive this company forward, is being able to pick the appropriate path. And as I mentioned before, the infrastructure that's in the area, that will come into play about which mills we can get access to, so we don't have to build our own. And big projects these days, CapEx is always a concern when you're spending a lot of that. So if we can partner with somebody or use one of these old mills in the area, that certainly would reduce the risk of going forward. And the drilling that we do, the average cost per meter, that's all in. That's assaying and the camp and all the geologist wages, whatnot, is around $250 per meter Canadian. Okay, and then let's see here, we get to the next point. So I just want to show what this long section looks like. This is this is the cross section, and you can see in the middle the plunging ore body, which is the 5 grams per ton. That's the high grade. Obviously, those white areas are areas that haven't been drilled yet, so a lot of opportunity to add ounces. So then you have something, you can see the outline of a pit boundary in gray that shows something close to surface. That could be an open pit. Now this needs further work. It needs to be optimized, but it just shows this optionality. And what we're trying to do right now is drill in these areas where there's white within this underground section and show how big this underground could be. Because do we mine it with open pit? Do we mine it as underground? Is this something that would interest somebody else? Let's say there's a small mill down the road, maybe an underground feed at 5 grams per ton might be better. If you have a big mill down the road that could take a lower grade feed, a larger tonnage, then maybe an open pit is more suitable. So we're actually going to start talking to our neighbors and see. One of the things about Red Pine, Alamos owns 13.5% of us. And that's a strategic investment as they have a very large mill 70 kilometers down the road. So it seems like they would have a leg up on other strategic investors in the area. But it's something that they're looking at the property, and they're watching us as we continue to drill and show the value of this property. Again, looking on long section, you can see the surface and the black line. We're looking at the side of the deposit. The sort of grayed out area where it says Jubilee Shear, that's a grade model behind there, but that shows the side of the pit. Now that's the larger pit, and you can see that it only goes down that far, just over 300 meters, because really that's all the drilling. And what I like about this is we've had a couple of deep holes on the left side of that pit, and you can see where they've hit, and they've had some very nice values. So we know the mineralization continues at depth. So for us, it's really about drilling in around those areas and it's showing how big this underground deposit could be. So right now we have 1.7 million ounces combined, indicated, and inferred in the open pit. If we could ramp that up to 2 million, which we think should be able to do with more drilling, and then we already have a couple 100,000 ounces in the underground. This is something we hope to get a line of sight on 1 million ounces after the current drill program is done. And, you know, we start to approach 3 million ounces, which would be pretty good, a pretty good sized deposit. And that's without looking at other larger step outs or other targets on the property. And that open pit's around a grade of 1.5. So typically in Northern Ontario, with a lot of these big open pits are around 1. So we have a bit of a premium on the grade there as well, where the underground would be more 5 grams per ton. So I think it's a really great deposit. And I think it's been, you know, because of its complicated ownership history in the past, hasn't had the work done that it should. But now, as we're starting to do this work, people are starting to get on board and seeing the potential. And that's why we've been able to attract some of the larger companies back into the stock and talking to us about, you know, future partnerships. So again, here's a bit of a long section. And I just wanted to show this. The red dots are really where we plan to drill. So right now we're not drilling in the open pit. We're not drilling near surface. We said with this 25,000 meters of drilling that we would do, which is fully funded, we would step outside of where drilling's been done in the past, be bold, be aggressive, and show people, even though we couldn't maybe have enough drilling to build out the resource, it certainly would show where the mineralization is and how big this zone could be. And so that's what we're doing now, is we're following this program here. And already since the start, you can see that there's a large fault called the Parkhill Fault on the left side. And we found mineralization again near surface. So we know it's plunging to depth, and then it hits this fault, and it's been faulted up near surface, and the whole cycle is going to continue again. And we expect more mineralization plunging down to the south. Now that's a little outside of where we're drilling right now, but certainly good potential for the future. And I thought that was a really good find. And it was found by some surface prospecting and a couple of drill holes already in late last year. So we're happy with that success. And already this year, with the drilling that we've done, we've only done about, of the 25,000 meters, we've completed around 3,000 meters. And you can see some of the gray, some of the old values there. We got some nice values here over 100 grams per ton. We got other ones, closer to 5. It's more of a moderate grade style deposit. And you can see that there's a lot of white spots in this map. And you can see the areas that we are starting to test, which is areas in yellow. We've already had some initial indications of mineralization. There's alteration. There's visible gold. So we're definitely already being successful extending the mineralization further than we've ever tested it before. And the one thing that's hard to appreciate is that this deposit, you see the scale bar there, it's big. It's about 2 kilometers long, and it's close to surface. And what we're finding here is that because of this strike length, the ounces per vertical meter is over 3,000. And with most underground deposits, anything over 1,000 ounces per vertical meter is usually pretty good, and we're at 3,000. So, I mean, when we do go into this project, whether it is open pit or underground, I think that's a really good that we have that many ounces on per vertical meter. And why is that important is because we don't have to be ramping down all the time and spending that money on development for ramps. We can be just mining horizontally through the ore body, and that makes you a lot more efficient and helps to reduce your costs. So really our plan to go forward here is you can see this, the roadmap here. So we did the resource update in August of last year. Then we went out, we raised $11 million, and that was oversubscribed, but we took $11 million. We were mindful not to take too much dilution, but we wanted to complete the drill program that we had planned at the end of that to show how much larger this project could be. So we started the 25,000 meter drill program in October, and with one drill until Christmas, and then when the new year started, we added a second drill. So we have 2 drills going right now, and this program should take us until around July or August of this year. So that means good news flow from the drilling results between now and August or September. So there should be good activity in the stock because there's going to be a constant news flow. And as we're doing this drilling, we're also starting to do our internal studies, because what we want to be able to do is to know for ourselves what sort of opportunities we would have about moving forward. And what I mean is looking at different mining and processing scenarios, such that we can determine what kind of mine is best suited for us, and what kind of mines might be interested to somebody else in the area in case there's an opportunity to merge or to partner with one of the other bigger mining companies around. So we just want to know our own value, so we can talk to them about it. And then, if somebody does want to deal with us, we know our own value of our project, so can better negotiate a deal of some kind. And then after that's done, we hope to up the resource estimate, and then probably next year do a preliminary economic assessment to lay out a lot of the economics of more defined from what the internal scoping or conceptual study is that we're going to be working on this year. So we've got lots on the go. We've got drilling, studies, and dealing with partners in the area. So a lot of options, and we have a good technical team that is going to be doing the work. So we're well staffed that way. We're well financed, and we have a good project to work on with the results already starting to come in. So we're happy with the way it's gone over the last year. Now, as I mentioned, our shareholders, a couple of things to note here. Franco-Nevada came in late 2023 and purchased an NSR, and that money was used to fund some of the previous drilling that we used for the open pit. But Franco-Nevada obviously does their homework. They're a well-respected royalty company, and they obviously believe in the project. They've been good partners for us, and they believe that there is a mine here, and are very supportive. We also have, you can see our main shareholder is 13.5% with Alamos, and They went pro rata on the last financing done in September of last year. So we were happy. In fact, I think they probably wanted to do a little bit more, but we wanted to give a chance for some other investors to come in, and we brought in Mackenzie, which is a large fund, Gold 2000, the Royal Bank of Canada, and Merck, based out of New York. They've been in the stock previously, and they went pro rata their 9.9% in this last financing. We also have Haywood. They provide the analyst report, and the Research Capital, who came in on the last financing. They had 40% of the book. They actually, Stuart McDougall, they're providing coverage. Stuart's the analyst, and he just produced an analyst report, which you can get on their website. And it's a very good report. It's very positive, and it's something that you might want to consider looking into. So it's good to have another analyst covering us. And I think as we go forward, other people are going to come in, and we'll have more coverage, and become to be a stronger company as people start to get into the story. The other thing is why this company. I'm sure that a lot of other exploration companies have come and said they're undervalued, and we do believe that as well. And the metrics that we use, there's a couple of them we could use, but we use the enterprise value per ounce, and so $11 per ounce US, which compared to our peer group that we have selected here that Haywood provided, you can see we're at the bottom of that list. So if we just look at ounces in the resource and its value, we're undervalued. But it doesn't include any value for the upside potential. And there's lots of it, as you've seen, all around the deposit that we have. The other part of it is we don't seem to get a value for where we're located. And that's in the middle of infrastructure of common infrastructure like roads and power and people, but more importantly, infrastructure to other mining companies that have mills and spare capacity that we could utilize for the processing of our ore, or for partnerships of some way going forward. So I think that's a really important aspect of that. And I worked a lot in northeastern Ontario and Quebec, in the Abitibi, and having a project in that area close to those mills certainly was given a premium. And I think that's where we are. We don't have that premium in our stock yet, but that's where the upside is that we believe. And again, just to sort of summarize everything, we are, in Canada, we're 100% owned. Good drilling results over the last year has led to the increase of 150% in the resource estimate, almost 2 million ounces, with a line of sight of 3 million ounces. We have a fully funded 25,000 meter program on the way. We have very supportive large investors now, financial institutions that we brought in, some of them that we brought in the last financing. So obviously people getting on board, particularly at this low share price. And now we just need to produce the results to show how big this project could be and how we're going to, take this company forward. So we have a few time for some questions here. When will there be drill results? Yep, we issued our first drill results last week, which showed that we have identified mineralization in the south part of the property, which is the faulted extension. So it shows that there's a lot of potential for the future. It needs more drilling. We've since moved the drills closer to the area where the existing resources. We've drilled there. We've already returned some good alteration, some visible gold. Those assay results should hopefully be coming within the next 2 weeks or so. And then we'll have another follow-up press release to that. The question for the underground mining, based on this, and this is why this is, I looked at this project as an underground mine originally when I worked for Wesdome, because at 5 grams per ton, it could easily be put in a truck and hauled down the road to the Eagle River Mill where I worked at the time. And we looked at this as 5 gram, although for underground, it's a moderate grade. The zone is very wide. It's anywhere from 5 to 10 meters wide. It's very consistent, and it's amenable to long hole mining. So the underground mining costs would be minimal compared to some more selective mining methods that some mines have. And so we think there's a good opportunity for long hole mining. The metallurgy is, some of it is straightforward. There's a part of the mineralization that has arsenopyrite, so the recovery in some of those areas drops to 90, but in the gold, where the gold is in quartz veins, it's visible. You crush it up, it's easy for cyanide extraction. Right now that it's just over 90% on the recovery. We think we can do better. It's one of the things that we want to do this year with the drilling program is collect more samples for metallurgical analysis. We'd like to move that up a couple of percent at least. And there's some things that we haven't tried yet that would maybe help to do that. We looked at, there's a portion of the mineralization come out with a gravity circuit, which is fairly cheap at the front end of a mill circuit, and then maybe produce a flotation that we could send for cyanidation after that. So these are all things that we have some initial metallurgy, but we have to do some more. So the question here: do you have the idea of the strike length of Jubilee Shear extension south of Park Hill Fault? Based on surface geology and some geophysics, we believe it's at least another 2 kilometers. So it's a lot of extension. And I think the reason they haven't found it in the past is because over that strike length, because it's plunging to the south, the mineralization is fairly weak at surface. And so a lot of the old timers would be looking for visible gold only. And it's plunging, so it's going to be below the surface there. And our initial drilling was down about 300 meters when we hit it. So I think that's maybe why it's been missed in the past. But there's about 2 kilometers of area that needs to be drilled there. Can you drill another 25,000 meters without going to the market for funding? No. When this 25,000 meters finishes in August, we would have money left to continue prospecting and other works till the end of the year. And this will cover the corporate costs. But starting another 25,000 meter program, which would cost somewhere in the order of $5 to $6 million Canadian, we would look to finance that as well. And that financing is how we do that financing. Obviously, we want to be the least amount of dilution we can get. So we're hoping with the results that we will be producing now in the first part of this year and up to July or August would start to increase the share price, so we could do a financing later at a much higher price than today and minimize that dilution for their shareholders. Next question: are you going to do a PE after this drill program? It won't be after this program, and that's because this program is going to be wider spaced to show how big it is, and therefore we'll have an estimate of mineralization that's there, but not to the level where it becomes inferred or indicated, which would we need for an official PEA. So although we would have it for internal use, we would have to go in and fill in some areas before we start the PEA. And I think what that internal studies will tell us is which direction that we might want to head, whether it's underground or open pit. And what that would do is then focus the next round of drilling to convert some of the resources to a level of inferred or indicated that we could use then in the PEA. Next question is, what is the long-term objective? Build a mine or sell to a major or mid-tier? Yeah, in the end, we are a junior exploration company, and starting a mine is a hard thing to do for small companies. As you know, we don't have the resources and people, and that doesn't mean we couldn't build it over time. But with so many mills in the area and so many larger companies in the area with existing operations, we're going to go through all all the steps of showing how big this can be, try to add some value and try to, show what would be, would do the groundwork to show what kind of project or what kind of mine this could be. But at some stage, it would seem that there's good opportunities for a partnership or a merger to one of the other players in the area. Another question here is, what is the permitting like in Ontario? It's really good where we are, and the reason is because if I just go back here to this slide, you can see here in dark brown, those are patented claims. So those claims, we have surface and mining rights. So on those areas, we actually don't require exploration permits in any way. Then lighter brown on the outside of that is areas where it's a regular mining claims. But what's nice here is because of these old mines were here, we actually have active mining license, which is great. Now, it doesn't mean we could go in there and start producing right away. We would need a closure plan, which would need to be filed with the government and with the First Nations, our partners there. We have a very good rapport with. So I think that we're in a position where the permitting could be quite quick. And then if you consider that we don't have to build a mill, if we don't have to, it just becomes an underground or an open pit operation. So there's no tailings, there's no milling, there's no cyanide. All of that would be at one of the existing sites. So again, you wouldn't have to worry about that in the permitting, and that would definitely cut off years of permitting time. I'd like to think if you were going in and you just need a mining permit, maybe you're less than 2 years to get it. So, I mean, things can change fast, but it certainly would be a lot quicker than bringing a project from scratch for a full milling complex. So, a real advantage for the property that's existing right now. So thank you again, everyone, for attending, and really appreciate your time today. Thank you.